Hello, in this presentation we will be entering and adjusting entry related to prepaid insurance into our bookkeeping problem in Excel, keeping in mind how that same information would be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're first going to take a quick look at QuickBooks and then jump over to Excel and enter the data there. When thinking about the adjusting entry, we are looking at the prepaid insurance. Prepaid insurance is one of those types of accounts where we're going to tell the accounting department to just every time they purchase insurance or pay for insurance, rather than debiting the insurance expense account, just to put it into this asset account. That's part of our system, that's part of our process, so that as of the end of the time period, we can go in there and adjust that. Why would we do that? Because the prepaid insurance is something that by definition we pay for before we consume it, and therefore at the point of purchase it's an asset. It's something we haven't yet used, it's not something we have consumed, and we're not going to put it or leave it up to or require the accounting department to periodically look at that throughout the month. What we will do instead is look at it periodically at the end of the month and determine how much of that prepaid insurance has then been earned and therefore needs to be taken out of prepaid insurance and recorded as an expense, reducing the prepaid insurance and recording the related expense. Now, in accounting software such as QuickBooks, as a similar way as it will be in Excel, we would typically use journal entries as we do with all these adjusting journal entries. However, it is possible within QuickBooks to enter this type of adjustment using the registers. We are going to use the journal entries as we post this in Excel. Here we are in Excel. We're in our adjusting entries worksheet and we will be entering the adjustment for prepaid insurance. This is going to be a pretty normal adjusting journal entry. We'll see it all the time in an adjusting journal entry type of problem. And like most adjusting journal entries, it'll follow the standard rules, which means that we're not going to have any cash involved in the account in this journal entry. But there's going to be one balance sheet account above the equity line, and it's going to be related to something that has to do with insurance. And if we look through them, we see prepaid insurance. That's one of the accounts that will be affected. I'm going to go ahead and right click next to that and make it yellow to indicate that that will be one of the accounts. There will then be one account below the equity line in the revenue and expense section down here. It's going to have something to do with insurance. And if we look through that, we see insurance expense. And so that's going to be here. So it's in, I'm just going to make that yellow right next to it. That's going to be the other account affected. Again, if we don't really even know what's going on, we could just pick up these two accounts knowing it's an adjusting entry and it has a balance sheet account and an income statement account. And we can even know which way it's going, in that we know that all income statement accounts have debit balances and they only go in the debit direction up, and therefore the insurance expense is going to be debited. So I'm going to debit the insurance expense by copying it. We're going to copy that, right click and copy. Scrolling back up to the top, we're going to put it into the new journal entry here, and we're going to say 228. We'll put this on top in B19, right click and paste 1, 2, 3. And then we're going to credit the other account involved, which in this case will of course be prepaid insurance. So we will copy prepaid insurance, scroll back down, that's going to be in B20, right click and paste 1, 2, 3. Then we're going to indent this. We're in the Home tab, we're in the Alignment group, and we are increasing the indentation. Now we just need to know what the amount is going to be. And in order to determine that, we'd have to figure out how much of this insurance that has been paid for has been used. A book problem could state this in two different ways. They may say that we have consumed or used what we're going to say 917 of this, and that means they gave us the actual expense number. That's what we would use. Or they can give us the amount that would be left. So if they said something like the unearned amount is 10,083, then what they're giving us is not the amount that we need to put in our journal entry there, but they are giving us the amount that we need this account to be after we record it. So we'd have to do a subtraction problem. We take the 10,083 minus the 11 11,000, and that would give us the 917. The other way we could figure this out is that we actually look at the policy term. This would be what we would do in practice. We'd have the policy term, we paid for the 11,000, and we're going to say that we paid for, in this case, a 12-month time period. And then we just need to figure out how much of those 12 months have passed, and that's going to be the amount that has expired as of this time point. Therefore, we'll take the 11,000 divided by 12, and we're going to say that 916 has passed at this point in time. So that's going to be our journal entry. We'll do that one more time over here. I'm going to put that same calculation here. We are in cell C19 equals 11,000 times or divided by 12 months. That's going to give us 917. It is rounded, so note that it is rounded there. We're going to credit for the same amount. So there we have it. We're going to record this. So here's what we will be recording in the journal entry, and we will record that to the adjusting column in our worksheet. Looking for insurance expense, we see here the insurance expense. Note there was $25 in it that has now been moved to interest expense where it should be, but we are in insurance expense, recording the insurance expense at this point in time. We are in cell M27. We're going to select equals at that cell and point to that 917, bringing the balance up from 0 by 917 to 917. That then puts us out of balance, of course, and it brings net income down. So the effect on net income here, remember, net income is the revenue of credits minus the debits of expenses. This is income on this sheet. This is where we started. This is the activity that has happened, and we are now reduced in income from 6,847 down by 842 to 6,005. Let's record the other side now. We have the prepaid insurance. That's going to be up top. We have the prepaid insurance here in it's the fourth account down. We want to be in M6. We are in cell M6. We will select equals, scroll down just a bit, and point to that 917 credit. Let's do that now. Scrolling back up, we are in cell M6. We're selecting equals, scrolling down just a bit, and pointing to that 917. When we select equals, it's going to take this 11,000 down to 10,083. So that's going to leave us, if we say that the 11,000 was 12 months and 1 month has now passed, this 10,083, if we divide that by the number of months left, which is 11 months, we get that 917, that 1 month worse. Or in other words, if we take the 11,000 for the year, 12 months, divided by 12, we get the 916. If we're saying 1 month has passed, then we still have the 11 months left. So if we multiply that times 11, that's what this number should be. So we can kind of double check our numbers a couple different ways, both on the expense side and what is still left in the prepaid insurance. Remember that a book problem could ask you or give you the data either way. They could tell you this is where we're at now and this is where we need to be, meaning you need to do a subtraction problem to get to that. Or they could just tell you this is the amount of the prepaid insurance that has been consumed and just give you the actual number that will be used in the adjusting journal entry.